Ignite your curiosity with Austin Next. We're watching Austin transform from a thriving ecosystem into a global superstar. With our host, Jason Scharf, we aspire to better comprehend the true nature of innovation. Together, we will uncover what makes a successful ecosystem and navigate the technologies shaping our future. Now let's dive into what's next.
If software is eating the world, does that include venture capital? My guest today, Gopinath Sundaramurthy, a co-founder and the head of data science at Ensemble VC, not only believes in a growing future of data-driven and software-enabled venture capital, but he and the rest of the team are building the firm with this idea at its very core. Gopinath is the foremost data scientist in venture capital and startups and has leveraged his diverse experience to build Ensemble's successful data product. Before founding Ensemble, he was the head of data science at the Kauffman Fellows VC Fund, where his models helped identify and win top-ranking startups, leading to incredibly successful returns. Prior to that, he was integral in building out the data science projects at IBM Watson Health and leading multiple large engagements using one of the largest patient health data sets, truly big data in every sense. He was a data scientist at Better Doctor, where he helped the startup develop algorithms that better match patients with the right doctors. He had also developed the metrics used to measure the accuracy and quality of their proprietary data. Earlier in his career, he was also a computational researcher at CellWorks, where he developed differential equation-based mathematical models to better understand human disease conditions. Gopi, welcome to Austin Next.
Thank you. It's a pleasure to being here.
All right. So usually when I start off with a VC, it's about check size, sector, stage. Ensemble's a slightly different approach in this. So talk to me about kind of the data-driven approach you guys do.
Yeah, I'll do the high level first. Sector stage easier to answer. Ensemble VC is an early stage firm. That is, we do Series A. We go seed, and sometimes we flex up to Series Bs. But essentially, the way we look at it is we're just trying to back great teams, and it doesn't matter which sector they are in, because we know that all sectors have amazing teams building things. Best way to think of us is we write $3 to $5 million checks into companies, and like we are built grounds up to be a very collaborative fund.
Great.
Yes.
Done. Interview's done. Perfect.
Yeah, I think when I mentioned the entire sector agnostic piece, I think that's sort of like how we set ourselves to be slightly different in terms of what we're doing. The main reason why I said we don't think a lot about sectors is because for us, we really do believe like teams are the most atomic units in every single companies. And there's many different ways of identifying teams, and how we set ourselves apart is really taking a much more data-driven approach in terms of looking at the entire piece. And again, data-driven is so many different flavors. But I'll kind of give you why we did the entire thing. What was like our biggest motivation to doing this, right? So traditional VC, as you might have seen, it's kind of outdated. The best way to think of it, because venture really does not scale. It kind of worked when everyone lived on Sandhill Road and the companies were also there, so everyone could just meet every company there and figure out how to finance. But one of the biggest trends we've been seeing in the last decade or so is, one, there's hundreds of thousands of companies starting every single month, right? Which is easy to say, but when you just understand the magnitude of number of rounds happening every single month, there's no way that any one team can really say, I've met every single team and really understood what they're doing. The second thing that we're seeing, which really has been driving this a lot, is talent is actually global now. And I think this goes along very well with your thesis too, is like not all the great talent is not just in the Bay Area. You're really looking at talent, like Austin is becoming like a really big area where a lot of amazing talent is moving to. You're looking at countries like India, where you're seeing amazing startups being formed, and it's pretty much all over the world. So talent has also become very global. And the challenge is, like, how do you really understand what are the best sets of companies out there, and how do you make sure that you are investing in the top companies out there? And that's sort of led us to build out this entire data driven strategy, where like we don't want to be spending our time endlessly just talking to companies and like building top of funnel for the best part. We really do want to be building strong relationships with firms, where we want to understand what they're doing, why they're doing this, and spend more time on doing those and less time just doing top of funnel. And that's one of the biggest reasons why we've been taking this approach overall.
So then break it down for me. How are you using data, AI, algorithms? Like, first, what exactly are you doing to really use data and to kind of drive the top of funnel in a different way than just hitting the street and meeting everybody, since you're looking across the world almost?
I'll start off with this one big caveat whenever someone asks algorithms is by default, all models are wrong, but some models are useful. Again, this is not my quote. This was a quote by a very famous statistician called George Box. But this kind of is really important because I think what you build your AI model for, like what are you trying to it to represent, is really, really important when you're building these systems, right? And that becomes more and more important as you build processes around this. So there's two key parts to what I think is really makes a successful data driven firm. One is your algorithms. What are they representing? How are they representing it? And what are the key outcomes you're trying to do for? Two, what are the processes that you're building around it? And I'll kind of touch on a little bit more in terms of what both are. So first one, what is our worldview in terms of what is our algorithms really looking for? So for us, it's all about the teams. The way we really think of it is, again, it's borrowed a lot from my past experience in healthcare and life science, right? Where we really look at teams as buckets full of people coming together to solve a given problem. Everyone comes in with their own expertise, skills, and everything else to solve this problem and what they have worked on in the past. The goal is really trying to understand what are they building right now and how is it relevant to all the things that they've done in the past. And if you can do that consistently well, you can stack rank all these companies to say which is the most interesting set of companies right now and what you should be talking to first. In terms of what are the outcomes that we're really interested in, like I'm going to say, it's with the current data out there, I don't think we can say that this is going to be a unicorn and this is not. But what we are really looking at is how do we make sure that we can talk to companies that are higher likelihood to move into diligence. So what do I mean when I say that? So a traditional VC would be like, hey, I had to talk to 100 companies. That is not just the VC partners, but also the associates. They talk to around 100 companies before one of them moves into, like you can say, the more deeper diligence. If you really talk to any sales organization and say, hey, for every 100 customers I talk to, I convert one, those are like really bad KPIs. Our goal that when we set this out was, can we bring that from 100 to 10? That is, for every 10 companies we talk to, let's move into one. And this is pretty reasonable for us because like our deal pacing is like 1 to 2 per quarter. So what that really means is, like, I want to be talking for every fifth company moves in diligence that, and like we talked about 60 different companies a month, which is what our pacing is. We should have a very strong diligence pipeline that makes us make that 1 to 2 investments per quarter
But
while making sure the quality of the company.
if you're looking at talent and what the people are able to do, and we can dive into how you're defining that,
Yeah.
are you not modeling out almost consensus, so that you're not going to see the outliers, like, oh, this person is really good in team building, or this person is really good in, yeah, they're in a healthcare company and they're really good in healthcare, and so that's going to bias towards incremental improvement and not necessarily towards outlier and more change driven types of
Yeah.
companies.
Oh, you're perfectly right. So, like identifying unicorns, I'll give you the loss ratios, right? So, again, we've done some internal analysis on this one. So, in early stage, you're looking at seed and seed plus and Series A's, the loss ratios are close to 80% of the companies. Essentially, 80% of the companies you invest in will either close shop or not have a very positive outcome. That is, you're not going to get your dollars back overall. That is a really, really high amount. And essentially, what we're doing and trying to model for finding out those companies essentially becomes you're moving into the areas of anomaly detection. That is, what is outside the norm in terms of trying to identify companies versus identifying the best teams. So we like our entire thesis is companies are more evolutionary. That is, people are working on these ideas in previous companies and they are taking those ideas and moving on to the next one. And the goal is, if you understand the skills, expertise, and everything else, you'll do a good job. And so VCs have been doing this a lot of times. I think the best way to really think of it is, if you give a very good VC who's been in the space for some time, here's two sets of teams. I have two teams here. Go through them and tell me which team is going to be good. He would spend like half an hour going through the team, understanding what they did. He is adding so much of context there, and he'll be able to tell me, yeah, I think this is a team you should talk to first. This is the team you should talk to next. right? And you can do that pretty well. And the problem is humans can do it for one or two at a time, and you can objectively compare because that's how our brains are built. But when you're trying to do this for like tens of thousands of companies, that's really where human brains generally don't tend to be as performing as well. But what softwares can really do well is, hey, you have these criteria. This is the context that you are adding to understanding what these companies are doing and why you think these companies are interesting. Let me just scale it and stack rank all these companies for you.
So
And
are
that
you?
way, what,
Go ahead.
sorry.
No, go ahead.
No, and that way, what really happens is you now have a stack rank list of companies where, again, we're not going to say that this is going to be a breakout or this is going to be a unicorn, but you have a higher likelihood of bumping into a company that's really interesting than just going by random through that entire like 10,000 list of companies.
What I'm trying to think though is, isn't the stack rank? This is where, and it maybe gets into the variables and the way, and maybe that's a way to kind
Yeah.
of break it down a little bit. Is what is it that we're looking for? I mean, and it's a great point because humans, you said the VCs before, they've been doing this on 1, 2 off, and there is some sort of black box algorithm that
Yes.
has been happening in the background. They've have
Yes.
their pattern recognition, they have their signs that they've been thinking about, and whether I don't even want to say unicorn. I don't want to like make that kind of breakout case, but just non-incremental. And so, what is it? What kinds of variables are we looking for to be
Yeah.
able to sense? Are we looking for the team? Is it a skill set? Is it a team chemistry? Is it like how is it the framework that we're thinking about when you're looking at what makes the stack ranking?
Very good question. Again, like I said, this is where you start getting into the nuances of how do we model this, right? Like I said, all models are wrong. You're really trying to figure out how do we model this so that you can have the highest likelihood of companies you're interested in coming right up. The way
It
we
would
tend
just
to look at
be
it is,
helpful if you just gave the listeners the secret sauce, you know?
oh man, I wish. Okay, but I'll kind of give you like a good analogy in terms of how you think of it, right? So one of the areas where you really see, so there's another area where anomaly detection is really, really important. This is what I used to study before. So in cancer biology, anomaly detection is like cancers are generally the anomalies to the general cells. So most cells grow fine. Some cells will acquire certain sets of characteristics that makes them cancerous. The main reason why you want to be studying characteristics versus just trying to study outcomes is all these cells, let's just say to become a cancer cell, you have like 7 hallmarks. There were 7, they expanded it lightly, but essentially these cells should grow. And like one of the characteristics is these cells should grow without any like prohibit, like any inhibition overall. They should be able to grow uncontrolled growth. They should be able to evade the immune system. So those are all characteristics that you have to have. The way you acquire those characteristics can be in different orders. For let's just say for an engineering firm, you're going to have a very high engineering talent and less on the management side. But for a product led firm, you're going to have more on, like, you can say, people coming in from the management areas where they have been able to sell these kind of things before. They'll acquire those characteristics before. So the characteristics are still the same, but the order in which they tend to acquire it before they become a very big firm is just going to be different. And it's very similar to the cancer one. Like, again, the steps of how these cells to acquire these characteristics are going to be different for every single type. But for a cell to be classified cancerous, they should have acquired all the 7 characteristics. Now, I'll give you a very simple example of what a characteristic is for that we look at. And this is pretty easy to say because we all understand this intuitively, but it's very difficult to model. So network, is a very, very important characteristic, especially in the VC. That it's a very relationship driven game, but can you actually quantify it? Because a lot of times people have been working in the VC space for long. So if you talk to founders, why do repeat founders do much better than first time founders? One, yes, they kind of figure out a lot of the stuff, but two, repeat founders also tend to have a very strong network that they tap into very easily. So this network allows them not just access to easy capital, that is, they've already worked with investors and built relationships with them that they can go back to. It also gives them very good access to talent. It also gives them very good access to, other key resources that most first-time founders will never have. And it's really thinking about what is the characteristics that makes them successful and modeling that versus actually worrying about, okay, here are the 10 characteristics that make someone successful. Because everyone is going to have a slightly different variation that makes them successful. But when they do what is always going to be a different order based on the industry, sector, stage, all those different things.
And how do you measure? network might be something. There's a couple of different characteristics where the things like the network might be attributable easily to the individual, whether you're doing like social media footprint, LinkedIn, X, Twitter,
Yeah.
whatever. There are other characteristics that are probably harder to determine whether it's the individual or the firm. Like,
Yeah.
this firm went up. Now they maybe were employee 5, so it's easier, but they're employee 100, so it's harder. So defining this, how do you kind of work through that?
That's the most difficult part, right? I think that's really where all the analytics goes in. Like, if you ask me, where does a bulk of our analytics goes in, it's really trying to answer those more difficult questions. Like, what did they do? What kind of roles they had? Like, how many firms you're looking at? How many millions of people are you aggregating to do this? And what kind of networks you're building? All that stuff is sort of getting into the proprietary piece of it, where this is kind of defines how we look at it, how we give attribution, how we evaluate, and everything else. So that's like I said, that's usually very much dependent on your worldview and how you look at the world, because the way you build these models is really built to represent. Like, at the end of the day, it all matters to KPIs. If I'm able to give them, like, for our firm, it's very clear. For every 5 firms that we meet, one of them should move into diligence. If you're doing less than that, that essentially means the model hasn't performed as well as it needs to. And that's really how we tend to be improving it. That's really how we measure month over month whether a model's doing. Is it moving away from what we set the goals to be, and how we should be improving it going forward?
So I like that you're able to have a real-time metric for the team itself and whether the models are working. There's an interesting, because when we think about startups and innovation, there's a couple of different metrics that you can measure them overall on
Yeah.
how they affect everything, right? You can measure them on almost the pure ROI for the VC and the exit. So what
Yeah.
value does that have? You can do it on the financial metrics of the firm. You can
Yes.
do it on more innovation oriented metrics. What's the the TFP, total productivity, that is done of
Mhm.
those types of things. And they come in different flavors, and obviously what you're optimizing for as a VC. I'm assuming, and again, obviously we may be getting too much into the weeds. As a VC, you probably are doing it, the final metrics towards more financial ROI, like were there exits, like that's the kind of end outcomes you were looking for when measuring everything on the input, or am I
I wouldn't
looking at
say
the what are the outcome measures that you're measuring against, or does it depend on the metric?
one. I would never say it's one outcome, and this is usually
Sure.
where I think it's usually going to be. That's why I said, right, it's there are different characteristics require different outcomes. And this is where I would say it usually depends on how the final model is aggregated and what you're really trying to look for. But like I said, it's never one. The bigger thing that I would say is, like, if you're really putting everything on one outcome, you're more prone to risk. Essentially, think of it as more like triangulation, that you're trying to
Right.
get into companies that have multiple kinds of outcomes all pointing towards something positive, versus just relying too much on one. And that's sort of the thesis that we generally tend to take.
Right. I think it's the Peter Drucker quote: "What gets measured gets managed." So as soon as you,
Yes.
even within your own models, as soon as you say like this
Yes.
is one thing we're going for, then like that's what you're going to go for.
Exactly. And then you would, like, endlessly engineer it to the point where you would only find things that conform to what you want. And then again, it just makes you more prone to risk at the end of the day.
So we talked about, like, there was this. A lot of it was kind of starting with the black box, in that we
Yeah.
were doing this as human beings, anyways.
Yes.
And you've built your models right now, kind of as the top of the funnel, and your metrics is how many move to due diligence. Kind of a two-part question, and this one is, do you see the data-driven analysis moving down the process and deal funnel over time for you guys? And then where do you see it intersecting? I mean, right now, is it okay, great? Once you have the meetings, we're not doing any kind of algorithmically based usage anymore, or what kind of happens after that?
Yeah. So, really good question. This is generally my thesis. Without process is not useful. Like, I'll be super honest about it. Like, you have, like, if the data that you're providing is not changing behavior in terms of how you're analyzing a deal and what you're working on, I don't think the influence of the data is I actually would say the influence of data is pretty low, right? And I think that is usually what we hold ourselves to. So the biggest thing that I usually try telling people is, yes, have a good data strategy. One, data is a compounding effect. It's going to take a long time before you get to a strategy that is really, really strong. But also have a process tied to it, because the process will really inform how to improve your data and how your model should be improving over a period of time. Like if we didn't have a process in terms of measuring what happens to a deal as it goes through the pipeline, how we modified our pipelines, like I'll give you like a really good idea. So traditional VCs would spend, I'm just giving an arbitrary number, but a good portion, like 50 to 60% of the time on discovery, that is identifying new companies, and less time prioritization, validation, and the diligence piece. So they generally tend to hand this off to associates who are always working on calling up companies. And the only way you tend to scale is add more associates, add more people on the investment team to be able to reach out to these companies. For us, the way we really think of it is, okay, it's awesome. Like a lot of our analytics and AI or ML, however you want to classify it, helps us with the discovery piece of it. And what that really means is we switch the way the investment team works from spending more time on the discovery side to really spending more time on the prioritization side. How do we get access into companies? How do we spend more time with these companies? How do we build relationships? It's like for us, it's important that we talk to companies before they're even fundraising. And that's really, really key, because if you really think of it, it's weird. But for us, the way we really think of it, every single startup is only going to be relevant to us for a 6-month period. That is, they are thinking about fundraising to they close the fundraising. And if it's a good company, that's all they're raising for. After that, it's too late. Where a Series A investors is not going to be relevant. Before that, they don't want to be disturbed because they're heads down building a product. So our goal is really to interact and build relationships with our companies in the 6 months. And we have to be super focused because we cannot do this endlessly. Like we have a limited size team. Half our team's on the data, other half is on investment. So we have a limited size team. So we're really helping our analytics inform when is the right time to reach out? How do we reach out? What's like the best way to get the warmest introduction into these companies? Because you don't want to be cold emailing them where it's like there's too much of inverse selections in terms of the kinds of company that respond to it. So you're really building process around how to use data in terms of helping you do the outreach, building relationships. And value add is a big thing. We do tons of value add where our AI will work with companies in terms of helping them prioritize some of the pipelines, like who they should be reaching out to, because we can give them a lot more insights on those kinds of companies.
It's funny. That was literally my next question, because it was when you said like we're valuable in this 6-month period we want to talk. I wanted to kind of dive into that. Then is how does the kind of flipping the algorithm around?
Yeah.
How does it help? How does it? Because if it's all about building great teams,
Yeah.
and then I guess in theory it should be, yes, you have a great team except for this giant hole at X, and we've identified this, and maybe we have even identified people.
Yeah, we've helped. Like again, I think it usually changes, and again, this is usually again really depends on the team you're talking to. There are some teams who like are aces at hiring great talent, and we don't want to step in there because they really know the kind of talent that they want to. They've already in conversations with them. Like the best founders we know are just waiting for the cash because they know who to hire. They've already spoken to them. They've already like built their relationships with these people. And sometimes if it's like for a role that's a little more obscure, we've helped people. Like we've given them saying, hey, here's a list of people that we think are very relevant in terms of the kinds of doing. The other one that we really see that people really want to work with us on is like understanding, okay, I'm thinking about the go-to-market side, right? Like it's a reprioritization, and AI really helps with the reprioritization piece. The other area is a lot of times we are the first people to commit to rounds because like we are talking to them like before they even fundraising. So once we've committed, we will use our systems to identify other investors who are likely to be investing in this round based on their past investments and what they're doing. So we're doing like everything is a prioritization exercise. Essentially, it's just trying to figure out what is like the best recommendation for this company. And we do this all as, like I say, think of it as a set of tools that you generally tend to have that you can use based on the kinds of companies you're talking to and what's like the best way to go from there.
Is the data built around, and the answer may be both, is it built around people or archetypes? So it may be like person, or like, for the next step, you didn't need maybe real simple, you didn't need a CFO. And likely in this scenario, yes, now you need a CFO. That's probably a bad example, but it's not a person related.
We try to be less prescriptive on those because those generally tend to change based on the kinds of company it is. Like I said, we've seen like very engineering heavy firms doing their hires, like the CTO or the CEO is leading a lot of the early, you can say, releases, especially in the early stages of the company. And the GTM team only kicks in like post Series A's. Essentially, they're using the Series A's as a way to build out their GTM and the other strategies. The other time, the teams, because the founder kind of knows this is not my spot, they usually get someone like head of sales early on itself in terms of helping them spear, like they lead that entire thing. So this, we're not very, very, like we said, we don't spend too much of time there. Essentially the best way we think of it is that's the area that the founder needs to figure out. What we really want to provide is tools for them when they want something, they can reach out to us and say, okay, this is how the best way to work.
So then, but how do you then think about, I know we started at the beginning, you don't do, you're sector agnostic,
Yes.
But then the nature of building a team in enterprise SaaS versus a bio tool versus a defense tech versus a energy company is probably very different.
And again, kind of goes back into you're really looking at characteristics of teams versus it's just a one outcome based thing that we're really looking at. We are trying to see whether these teams hit certain sets of characteristics that we're very interested in. If they hit, like, let's just say 3 out of the 6, then we are engaging and talking to these companies.
But are you defining the characteristics? Are you matching the characteristics per sector is more the question. If you're looking at,
it's normalized. It's always normalized. Everything has to be, like, again, contextualized. So the way you think of it is a lot of things have to be contextualized. All the data is contextualized by region, by like geographies and things along those lines. But yeah, all the data is always contextualized by sector, stage, and geography.
So if everything, I want to pull that thread a little bit. If everything's contextualized by, you even put in their region and sector, does that mean that you might be getting a significant variance in outcome if you're finding a high level team in a, let's say, lower performing region and sector than a high performing region and sector, but they both hit, when you've normalized, they both hit high in those contexts? Or am I thinking about it wrong?
I mean, it's so the way you think of it is opportunity, right? So I'll give you like a good example. For us, one of our best investments that we've done in the past is a company called Grow. This was a company that was building the Robin Hood of India very early on. We did their Series A piece of it. We did not have any experience in the Indian markets, but we could see that their team was among the best teams out there building something very interesting in that space. So the goal here is, if I have to meet one founder, it's going to be this founder. And we met the founder, we built the conviction. And once we build the conviction, we help them with the round, put together everything else, and Lalit has just been off the races. That company, if we did the Series A, that company is now like a multi-billion-dollar company, one of the largest trading, publicly traded, used for equity trading in India. The idea is very simple. Like, if you're able to do this consistently, you will identify. The goal is, where do you want to be spending your time and how do you want to be spending your time? And this is really where the prioritization comes in, which humans are really good at. And this is really where we let the team make the call. Hey, I'm really interested in this one, or I think this area is becoming something interesting. Let's spend some more time there. The data is providing them the best list in every single areas that they're really interested in working with.
And it gives you the ability to scale at the funnel. That's your arbitrage opportunity, because you may not be sitting in Austin, you wouldn't have found that company in India necessarily.
Exactly. And most of our companies too, right? Like, the way we think of it, there's two kinds of companies. There's the diamond in the rough companies that is like, hey, I'm like, one of our best companies is a company called Blueprint Health, based out of Chicago. The founder was not really a healthcare founder, but landed up building a healthcare firm because of his personal conviction in the space. But you could see that the team he's putting together was amazing. And we flew to Chicago to meet the founder to do this. And that's like a diamond in the rough company. And then you have companies like Ceronic Technologies, which is like, everyone realizes is really interesting. How do we make sure that we are there right first and building that, like, going and spending time with Dino and the team there, like looking at them, talking to them, making sure you get there. So there's two different kinds of companies, and the strategies are different for both of them. But you want to have both in your portfolio to build a very strong one.
So we're kind of in this AI moment.
Yes.
There's a little bit of hype going on with it. And one thing that I've seen, is LLMs are becoming highly competitive. 1 week Anthropic is the best, then OpenAI is the best, and so it's going really fast. And there's been some question, especially if, and obviously don't have like a PhD in this, but like if small molecules take off, it may even be commoditized.
Yeah.
there is some sense, right? People have talked about like, there's some herd mentalities in this in the VCs. If this takes off and your thesis and proves out, one would expect that this data driven approach will continue to be adopted. So how do you see this kind of playing out? And obviously, do you see then the top of funnel being commoditized like everything else?
I mean, so one, AI is going through its, like, this is my personal take on this one again. So AI is going through its own personal, you can say, the hype cycle through, right? When something comes out which is brand new and has a lot more unknowns, people love to explore and see what's going on. And as people explore, you will find out vulnerabilities and issues with the tech, where now you're looking at how do we address it so that it can be more used in a traditional sense, right? So a lot of the initial products that used LLMs and generative AIs were generally in like either MVPs or internal tools, where like the hallucination and the lack of you can say building out evaluation metrics was not as important. But as you start moving more into production, or you're like, hey, I'm giving it to consumers, I'm giving it to enterprises, those guardrails become more and more important. So you're seeing this, like, it's going through like its phase where, okay, people are now building tools to do this better and do this right. So I personally think it's just a matter of time, where yes, the expectations were really high to start off with, and you're going to see rapid development, and that's completely fine. Now you're going to see, okay, to make it move into more enterprise ready and make it move into this particular space, you're going to see some maturation in the space, where it's going to be consolidation. You don't Not everyone needs a large model, to be fair. Like, not everything needs to run through a large model. Small models will sometimes do perfectly fine. You're going to see areas where there are multiple models used together to accomplish a given task versus one model overall. I think those are just, like, the way I look at it, those are just evolution of how LLMs will be used and what's going to happen in that space. There's definitely going to be like newer breakthroughs that's going to change the way people use LLMs. I'm less worried about that. But overall, I still, it for me, it doesn't take away from the impact of what it is going to have. Like, humans are very like, the way if I think of it is like, humans are very text heavy in terms of how they tend to communicate, what they tend to do, and everything else. And so far, like, the traditional methodologies that we use to understand text and any other form of art, any other form of data, has not been the best one. LLMs do provide a very interesting avenue in terms of analyzing and summarizing and, like, helping you generate new text that is very interesting. Does it solve all the problems that we have? I don't think so. Generative AI and LLMs are amazing for some use cases, and I really seen some amazing potentials there. The other ones, people are still figuring it out, and I think there's somewhere around which before we can start realizing some of these potentials.
But if this becomes more widespread, let's just stick in like the VC
Yeah.
environment, and
Oh, yeah.
you and all of your all of your cohort are using
Oh, yeah.
various models of this kind for the top of funnel. I mean, how do you maintain any sort of alpha if everybody's using relatively the same method? Like, how does it scale?
Yeah, it's a very good question. I think I am actually pretty bullish on this one. One, I would love to see more firms using data. What that really means at the end of the day is founders that really have the vision and building a great team will get founded, and it becomes less dependent on, hey, who I know, versus, do you have the right vision and the right team to be able to accomplish something? They are likely to get funded. So I think it's a win for the overall industry if more teams become data driven. I'm super bullish. So the second thing that I'd really like to hit on is the fact that, like, any data strategy is a compounding advantage, right? Like, where we started off like 6 7 years back, and Colin going all the way back to 10 years, like, what we did then to what we did now is usually building on a lot of the stuff that we started off with. So it's not like you get up one day morning and be like, hey, yeah, today I'm going to use data and it's just going to be as good. It's usually going to be very iterative. You're going to go through multiple steps. You learn something doesn't work. You then learn that this avenue is amazing and you start building on it. Just to give you an example, right? So LLMs, when we started experimenting with it last year, the use cases were pretty small. Like, we said, okay, this is good, mostly because the prices were so expensive that we couldn't run it on larger data sets that we wanted to. And it's weird because VC is a very exploratory phase. What I mean by that is there's a lot more, like, it's not like you just know I need to run it only on these 10 things. It's, you have to run it on the entire universe to understand what's happening here. So it's
That's it,
like
just the entire
close,
universe.
like close to 80% of the data is unstructured in the VC space, and only 10% is actually structured in any usable format. And most people are like using the 10 to 15% to actually use the data, and the 90% of the data is usually just left untouched. because there's no structure, there's no way to actually use it before. So a lot of the stuff that we've been building on is like, how do we structure them? How do we make sense of them? How do we actually use them? How do we fine tune models to be able to do this consistently over and over again? And building out these small things. So like in the last 6 months, like the amount of newer fine tuned models that we were able to push out was much more higher than what we've been able to do in the last 2 years, a year and a half at least.
So
And
you almost, from the public markets to VC, it was
yes,
highly, you could say, argument, efficient market hypothesis
yeah,
versus artisanal private, apprenticeship model. Like that was the two ends of the spectrum.
yeah.
And then obviously, algorithmic quant entered into the public markets. Does, with the advent of AI and the fact that you said 80% was unstructured and us being able to slowly digest and turn that into, is VC in the private markets going to start looking more public, efficient market ish in kind of looking that way, with the fact that we can start taking more of a data driven approach to it?
I think so too. I mean, I really do think so. I mean, that's a big bet that we made. Like for us, we made that bet when we started the firm that on day one we will be a very data-driven firm. And because we really did see the writing on the wall, like it's not just us, right? You can see there's a lot more data coming online in this space. Like there's a lot more data getting opened up. There's newer providers that are coming into the space that never existed when we were doing this like 6 years back. The quality of data has drastically improved in terms of what we've been seeing over the last couple of years. Just the quantity of data too, like what kind of data is available. We never had, like when I started off 6 years back and I thought, oh man, I could do this. No, this is not even close to what we could get. So you're seeing the space like adding more data, and you're seeing the larger firms like I like most of the large VC firms have a data strategy. They have a head of data science. We had, like I said, you could see there's so much of like, I'll give you a good idea, like just in terms of newsletters and how people are engaged and these various surveys that are going on, you can clearly see that every firm is investing in this space. They really do see the space moving into more into this region. The question is, like there's two different ways of doing it. You can either do this grounds up when you're starting the firm, be data driven, or then you have like a data driven strategy to your existing, and how do you work that into your overall workflows. uh, I think both are amazing because now you're giving opportunities to be more objective about a lot of these different things, and it both have their pros and cons. Like that's usually how it always goes. But like there's tremendous interest, and actually like my perspective is there's a lot more firms are going to get data driven very soon. Like it's just a matter of time.
So the public market data driven, the big advantage, and I'm being overly, simplistic here. One big advantage is speed.
Yes.
How fast? Obviously, the algorithm itself is huge, and are you making the right decisions?
Yeah.
In the private market, in startups, it's obviously more, it's more stochastic because the events don't happen as often. So
Yeah.
if we go to this very, very data driven world, and everybody's using it, where do you see, and maybe like your Blueprint and Saronic examples are probably the two good examples to kind of go through, where becomes the competitive differentiation? How do you then get into, and maybe contrast those, like how do you get into the deals? How do you get into the ability to say, okay, great, we probably, we can say everybody's algorithm is good enough that we've identified here are two great deals, and we want to get, and we've all got that same good data, or maybe not. Maybe everyone's got, everyone's running after Dino because he's awesome. Like,
I mean,
take me through those.
good example is in the public market. Like nobody knows what Renaissance Technologies actual algorithm is, right? Like that's what makes them so competitive. Like again, like we don't reveal the algorithms for the exact same reason. We talk from a high level what the process is and how we think about it, but the algorithms are still very complex. They take years to build. They go through rigorous backtesting. You have to do all of this analysis, all of these different calculations that needs to be done. Like I'll give you a good idea. Like there's so many different data sources that needs to be merged. It's not a trivial task to just merge all of them. It's not like saying, hey, here's data set one, here's data two, just join them together. It doesn't work that way, right? So there's so much of work that needs to be done, and that's why I keep saying data strategy is always a compounding advantage. You have to be in it for long enough for you to see the value overall. Like initially, the value is very low. When you just get into data and start putting in data, the value is going to be much more lower. like it's the way you think of it as data is making decisions for you. The higher value decisions are going to take time to get there, and it's usually a compounding effect for the models to be able to make the higher value decisions.
Does that then say, given the time element and the compounding, that there might even be more value to the data-driven approach in venture because there's more time between decisions?
I mean, it's not the time between decisions. It's more around like it takes like for you to be able to build these analytical models. You have a lot of learning because there's a lot of unknowns. It's the world in this area. There's mostly just unknowns, and when you're trying to build these models, you learn a lot in terms of what works and what doesn't work. And there's not like a research paper that you go to, or you have an open source model that you go in and be like, oh yeah, this is what it does. Let me try replicating the same thing here, right? You pretty much have to build this, understand what's the right way to build this, why is this the right way to be, like how do you build an architecture for this, what kind of data sets you need, how do you merge, all those different questions needs to be answered. So it's usually very tightly coupled with your strategy that you have. Like again, our strategy is built for the kinds of models that we're building. It doesn't work if it's going to be, like I said, I'll give a good example. A pre-seed data strategy is going to look very different than a Series B, Series C data strategy is going to look very different from a Series A data strategy, because everything is different between those. Like just to give you like the way you want to build a fund, like you need to have a large number of like rounds, like large number of investments for a seed fund when compared to a B fund in terms of how the profiles look and how the returns are going to look.
Mm-hmm.
And that simple difference itself changes the way you think about how you want to model the problem.
No, that makes a lot of sense, and it is just a very interesting time as we're pulling all this together at the same time that the tool sets themselves. I mean,
Yeah.
how do you adapt these models and think about it as, as we said, like Gen AI was only a big thing recently, and so the tool sets
Yeah.
themselves are just changing so rapidly, and it's not like you can take an axe to the model and say, "Oh well, we've got this whole new thing. Let's go start from scratch."
Yeah, it's a really good question. I think it's again, you make fundamental decisions. Very early on, we made one decision that yes, we will have a data-driven strategy. The other thing that we made a very call was that we will be a data science team, and we will not be an engineering team. And the way we've built our team, like who's doing what roles, how you want to compose it, where we're allocating most of our resources, what kind, like we're not building front ends, we're not building applications, we're not building apps, we're not building any of those things. We're very clear, like, hey, we will use these platforms, we'll use managed services, we'll use these. Our goal as a team is to only work on the data science piece. Everything else is not the current problem. And again, we've been very forceful and thoughtful. We also are ruthless in terms of how many projects we hold. If we cross a threshold that we see a project is not giving its value in like 3 months, we will shut it down. And we've been very ruthless about it. And it's just like the mentality that you want to take in, like be very, like have very good KPIs, like having a process to measure things, making sure that you modify the investment team's processes to better replicate what's happening on the data side. Like I'll give you a very good idea of what that means. So when we started off the firm, we did not really know how the investment team is actually going to use the data. I can generate the best data in the world, but if the investment team doesn't know how to do it on a day-to-day basis, like if they log in today, do they know what to do? If that piece is not there, I can give you the best list in the world, but that's just the best list in the world.
Mm-hmm.
How do you build a process so that the investment team knows how to use it? How do you make the data available in a form that the investment team is able to comprehend and understand what they're seeing and why they're seeing it makes a difference? Right? All of those are very, very essential. And not just our team, like we are a very collaborative fund. So we will work with our partners in terms of understanding what's going on there. Right. And when we have to like work with them and we have a data-driven strategy and they don't, we have to be able to convince them or show them why we are seeing something and why they're not. And being more thoughtful on building out these processes that are way more long term, and I think way more like essential to build trust in teams, is I think way more important than how good the quality of the data is or how good the model is, because the model can be the best, but if your investment team doesn't trust the process and trust the data, it's not going to be helpful.
So now, kind of digging into the data a little bit and trusting it, how are you able to use or think about the data in any ways of what it's kind of told you about regions as a whole? Are you able to kind of think about like what I know you have like you have Icon and Saronic here.
Yeah,
Is it able to tell you anything about Austin?
man, data and Austin. Austin's amazing because like it just happened that some of the best performing companies in our fund are from Austin. The two of them is Icon and Saronic. Like
All
it's
right, full
mind
stop.
blowing
We're done.
because it's growing and the list is always growing. And the thing is, like when we started off, we never had this thesis that yeah, we're going to do this or we're going to be an Austin fund, right? Because we always said talent is global, we will go to where the firms are. And we have a couple of firms based in California, we have a couple of companies in the other areas, but Austin always just had this very unique set of talent where it started off with Icon. Like we were among the first people, like when we started the fund, we just knew this. The data was saying, dude, this is a company you got to do. We build conviction. We help them that they get the round and everything else. It was super fun. And then when you started seeing Saronic, it's it's. I'll give you a quick idea. The talent, like this is where I always say that I don't think Austin should try to be San Francisco because what Austin
I
has
agree.
is very uniquely what Austin makes. And it's going to take a couple of generations of founders. Generation of founders doesn't mean like 30 years or so. Usually in startup cycles is much more smaller. You're going to go through a couple of generations where you have the more the traditional talent coming in from companies like Apple, Amazon, Facebook, and everyone else, which actually is really good quality talent working on some very hard problems, engineering problems. And then you have the entrepreneurship mindsets coming in from people who are like coming in from SpaceX, and then you have now Icon and everyone else. Like people are pumped. People are really seeing how to build a long-lasting startups. What's really unique is the kind of startups that are starting here, especially with the Army Future Command here and everything else, is a whole different breed of startups that we are not seeing anywhere else. Like it's uniquely Texas, uniquely Austin, and I think it's we are super bullish about. I really think this is among the most interesting spaces right now because it's creating its own unique ecosystem that is going to fuel itself to even more faster growth in the future. Again, this is the compounding effect. The talent is a huge compounding effect. People come in, learn that directors of these firms that are building right now, 5 years from now, will start off their own firms, and
Yeah.
those firms will be way better than all these other firms, and they'll just keep building on it and making like even more powerful firms going forward.
See, it's interesting when we talk about like you guys being sector agnostic, but then one of the things that I've talked about a lot is this Austin being very kind of convergence
Yeah,
tech.
yeah,
And is there, when you put in the data and think about it, like Icon being that, and I just had Evan on, and he talked about that it was AI, it was robotics, material science, and software. That was Icon. And
exactly.
you think about like Saronic, it's AI, it's drones, it's defense tech. So all of these kind of convergence of different things coming together. And so I wonder as we start thinking about the the way I put it is I think there also needs to be a ecosystem company fit that helps it launch. So the example,
Agreed.
like if you want to be in foundational AI models, you probably want to be in San Francisco. Makes
100%.
a lot of sense, right? If you
100%.
want to be in
Yes.
critical tech, you probably want to be here. And I just wonder as we think about those types of fits, and you're thinking about things like when you're doing like an ensemble model, does that kind of? I wonder if that's a layer to start thinking about putting in. Is are they likely to succeed given the resources that are around them? At the same time, I mean, of course, people can move, and there's that aspect as well. But
Yeah.
it's an interesting layer, I think, to start thinking about on top of all of this.
Yeah. I mean, I think it kind of it's a you bring in a very interesting point because I think companies usually move to where they can find the best talent, like it or not. Like if an AI company starts here, as they start growing up, there's a reason why a lot of them move to California. Because if to break through the next level of talent growth in terms of what kind of people they want and where you're going to find them, you kind of have to move to the location where the talent is. And there's one reason why a lot of companies are moving to Texas is also the same thing, right? So like Texas has always dominated in the hardware software quasi thing. Like think of semiconductor industries here; it's decades old. right? And when companies are building hardware or building anything close to that, they kind of naturally move to Texas because that's where the talent is. And that's where and that's, you're going to start seeing that a lot more, where because the talent exists here, if a company is thinking about growing, they will make that natural move to move here because that's where you're going to get the best talent. And if companies like these companies are like very, very sure about the kind of talent that they want and they really know where to get it.
I don't know if this is going to happen or not, but I know Anduril just announced their Arsenal One, and they haven't announced where it is. I'm going to guess that obviously Texas is on the list, and if you look at their new list of if you look at their I think it was like rearming the arsenal, whatever the latest she was.
Mm-hmm.
It mentions Tesla a number of times, so it kind of in my head, Austin makes a lot of sense. I always figure I think it's Hardin. I think it's the way they just raised $100+ million in their precision metal machine shops, and they're going to do a whole number of factories. And they mentioned Texas and Virginia. And it's like, okay, so let's just say for a second, Anduril puts Arsenal One in Austin, and Hardin puts their thing in. Like, then at that point, you're like, of course you would put any sort of manufacturing of critical defense. Like, then at that point, it's just the flywheels continues to go. It takes those kind of sparks, right? So because of OpenAI starting out in San Francisco, that was the spark, and then you're off and running.
Exactly, right? Like, talent movement is pretty clearly tangible. Like, you can see people working in these firms saying, hey, I have this idea where this is not exactly what my company is doing, but slightly different. Like, this is a different avenue that I want to be pursuing. And they will leave their company to start off this new company where if they see the market is big enough, but the current company is not pursuing it, that's how usually new companies form. And that's why we usually back founders who worked on problems before.
And then you have those interesting connections, right? Because then you have not only, if you got the defense tech meeting with the health people, and then you got interesting, defense-oriented health companies coming out, and then you got the quantum people and all sorts of, and that's the thing I think is really, amazing about Austin's sector diversity is just that we have so many different things here, and then they start connecting together. And you're like, oh, that's a weird convergence of sectors, but creates really interesting companies.
When you actually study mafias, that's actually a very key point. Like, you will see, like, in hindsight, a lot of mafias make absolute sense, right? Like, I will say, watch out for the Anduril mafia. Like, Palantir was a very obvious one. Watch out for the Anduril. SpaceX already has a massive mafia. It's just so many people leaving SpaceX and forming new companies. You're always going to see, like, whenever you break into like a greenfield opportunity where you see the market is just so massive, you're always going to have founders take up like slightly different spaces so that you can keep moving further away and build on this entire greenfield opportunity. So I think we're just getting started, honestly, in Texas at least. So there's definitely a lot of room to grow.
Yes, you can definitely feel the momentum both from the organic and then the inorganic of everything that's just kind of moving here and growing on top of it.
Yeah.
So Gopi, this has been fun, and as a data nerd, we could keep going as we have in other settings. But I always like to end with the same question: what's next, Austin?
Oh man, I just mentioned this again. I'm super pumped. I really think we are sort of in the forefront of a very interesting evolution of the ecosystem. Like, this ecosystem was traditionally like very much semiconductors, but now you're seeing like the next generation of companies, the young founders. Like, this is where I said the young executives, like, moving here to build the next firm or build it with someone else, will start off the next set of firms. And like, I really think we're just getting started here. I am pretty confident. Like, this is one of the spaces where I don't know what it's exactly going to be, because as someone who's, like I said, all models are wrong and is somewhat directionally correct, I'm going to say that I just know that it's really interesting. The question is, what does it really take to build this next system? I keep my fingers crossed. It's going to be very positive. That's all I'm going to say.
I can't wait to see it. Thanks so much for joining.
Yeah, thank you so much, Jason.
So what's next, Austin? We're glad you've joined us on this journey. Please subscribe at your favorite podcast catcher, leave us a review, and let your colleagues know about us. This will help us grow the podcast and continue bringing you unique interviews and insights. Thanks again for listening, and see you soon.